Hello everyone, my name is Tagge. I work with Memphis Investment Properties. I'm going to explain a little bit more about our pro formas and why I think and I believe real estate is the best investment you can make. I've analyzed many different ways where you can put your money. When I started working and saving money, I thought, where's the best place I can put this money? I first had it just in my savings account, making me a whopping 1% return on investment. I do know a lot of other people that have that same scenario where they have, some money saved up in there and they figure it's a good place to put it. It's better than nowhere. And that is right, but there are some better places you can be putting your money and, increasing your return on investment significantly. So first, let's consider 3 different places where you can put your money. Obviously, the first one is you can put it in your bank account. So I'm going to compare this to a property that we have. We have a property on 4540 South Berry Pick. The price is $99,900, and after paying a mortgage and all the expenses, you would make $210 a month cash flow. $210. So in order to make that much money in your bank account, producing you a 1% return on investment, you would need to put in $252,000 in there to make that much every month, which would be $2,525 a year. So as you can see, that's quite a bit of money. I didn't have that much sitting in my bank account, significantly less, and it was only making me very little. So I thought, what would be a better place I could put my money? So what I started is putting it in the stock market. I started putting it in Facebook, Apple, Google, all those hot stocks. And what surprised me is that it's very frustrating. It'd go up, it would go down a lot. Some stocks I'd make a lot of money, some I would lose a lot of money, and some I'd make just a little bit. And really playing that game, you either have to be doing it all day and totally involved in it, or put it in a mutual fund. So I started finding safe, conservative mutual funds. And what I saw is that on average, they're making me around 5% return on investment. So with a 5% return on investment, in order to make you $210 a month, you would need to put in $50,400 into that mutual fund. It would make you that every month. So that's a lot better than putting in your bank account at 1%. And speaking of which, most bank accounts are 0.2%. So this is a lot better, actually about 5 times better. And you need a lot less money to produce the same amount of return. Then I thought, what's a step better? And that's when I discovered real estate, especially rental investment properties. So in real estate, on this particular property, we have initial cash invested, so that's putting your 20% down on a property, paying, some closing costs, startup fees and inspections and stuff, paying $22,852. And that would give us $210 a month in cash flow, which would give us an 11.1% return on investment. So that is double of what the stock market is, and 10 times or 11 times better than the bank, putting in your bank account. So this just blew my mind. I thought, oh my, I need to put all of my money into real estate. And also because I can control it and I understand it more and I can do a lot more things with it than just in the stock market. I can't go and tell Mark Zuckerberg to increase the value of Facebook. I can't control that. And same with the bank account. I can't control this 1% rate. That's just what the bank told me they would give me. And they're probably lending out the money to a real estate investor. So really they were just using my money for other people. So I wanted it to be mine and using it for myself and using them to my advantage. That's where I came across why real estate is so ideal. So the first I and ideal about real estate is that you get income. Okay, so for this particular property, we're getting a yearly income of $2,525, which gives us an 11.1% ROI. So we already get that. Your rent minus your expenses, that's your profit. So that's great right there. I'd be happy. What I didn't know is that you can actually have deductions on your property. So you can write off your property management expense. You can write off the mortgage interest you pay on this. You can write off repairs needed on the property. I can write off my flight to go see my property in Memphis or driving around. It's actually, each of your properties a miniature business. So every one, I can write off expenses for each one. So even if, like, let's say you lose money in the stock market, you can't write that off when you access the tax account, you could probably write off a little bit of it, but for me, I can write off basically everything I'm losing or even spending on my real estate. So you have far better advantages of deductions. You can also write off depreciation on the property, even though the property is appreciating. So just saying one thing, I'm not an accountant, I'm not a lawyer or CPA or anything like that, so please consult your professionals before you make this, but after consulting mine, these are the things that I found out I didn't even know. And so after deductions on this property, I was able to deduct around $9,353. And assuming I'm in a 33% tax bracket, I would get a tax return of around $3,086, which works out to be a 13.5% return on investment. So basically we just doubled your investment right there, is what you can basically get your next net tax return on that. The next part about real estate is that you get equity. So in equity, meaning the tenant's paying rent every month, and during your you get principal and interest payments on your 30-year mortgage. During the beginning, the principal payments are low, and then towards the end they get higher. But even after the first year, so I'm just considering the highest year when you have the highest interest payments and paying very little in interest, you would pay down $1,152 in equity pay down. So that money is yours when you sell the property. So that would be a 5% return on investment right there from your initial cash invested. So we just put some more icing on the cake by showing that you can have equity mortgage pay down. Another part in the A and I ideal is appreciation. So your property appreciates. I'm just going to assume a very conservative 3%. As you know, some markets are 7, 8, 10, 12. In Memphis, though, we're going to go on a conservative 3%. So saying this property appreciates 3%, now it's not of what you invested, it's what the whole value of the property is, which this property is selling for $99,900. So 3% of that is $2,997, which works out to be a 13% return on investment on top of what you're already making here. So that just blew my mind right there as well. The last part about real estate is leverage. The fact that I can put only 20% down or 25% down, I can leverage it 1-4 or a 1-5 ratio. So that would basically increase my that increases my buying power and allows me to buy more and more properties instead of having to put the full face value of what the stock is worth. So that also increases your potential. Totaling all of this up, this would give you a 42.6 total return on investment, which is a crazy amount compared to these other alternative investments. So looking back at all of this, I thought it was a no-brainer to start investing in real estate. And I'd love to show you some more things that I've learned here in Memphis and what you can do to get started investing in real estate. It doesn't take that much to get started on one property and start the time of this, you know, you're paying down your equity and your appreciation on your property. The sooner you get started, the better time works with you.